Hello, hello, everyone. Welcome, welcome. Thank you for being here today. I am so excited to have you join us for this Maximizing Your Profit Margins Masterclass. We're going to talk about the ultimate pricing strategy today. My name is Dory, and I'm the COO for the Cashflow CFO and your co-host for today. Before we dive into the content for today, I'd like to take just a minute to introduce the wonderful Andrea Jenson. Some of you may know Andrea. She is the founder and CEO of the Cashflow CFO, a fractional CFO and accounting partner that helps scaling business owners make smart financial decisions based on data. She's also the creator of the Predictable Profit Accelerator, a 5-step holistic approach to securing your business finances. Prior to opening her CFO firm, Andrea ran the finance departments for some of the largest companies in the world, and she was recently named a top 5 business strategist for scaling a company in 2023 by Success and Forbes magazines. Besides being an incredible entrepreneur, investor, and consultant, Andrea is also a wife, mother, soccer player, and passionate volunteer. Andrea, I'm going to turn it over to you because I know you have some really important information to share today, and I'm super excited to get started.
Awesome. Thank you, Dory. I just real quick, it looks like my video is not turning on. I'm not hiding on purpose.
One second here. Let's. That might work there. Sorry about that.
Hey. Awesome. Hi. All right. I promise I wasn't hiding, guys, even though I don't like hearing all that stuff about what we've accomplished with this company, which I know it's been amazing. So thank you, Dory, and welcome everybody. I'm so excited that you're here. I'm most excited that you are making this commitment to yourself to learn more strategies, learn more resources, and really just you're investing your time, which is your number one resource, into making your business better. And so I, want to acknowledge that and really welcome you. And I'm excited that you're here. We're going to go over some really great stuff, like Dory said. And I know that it's going to really help you with the way you run your business, the way you make decisions, all that good stuff. So anytime I can make things easier for my fellow entrepreneurs, I'm all about that. So let's go ahead and get started. So as Dory gave me that beautiful introduction, thank you for that. I would love to just tell you a little bit about, kind of how we got to where we're at and what we're all about. So my background, I've worked for private equity, I've worked for venture capital, I've worked in really big companies, but where my passion and where my heart is really working with entrepreneurs and business owners, CEOs that are out there trying to grow their companies, trying to really make an impact in the world with the products and services that they're offering and the solutions that they're bringing forward and using to create a business, to create an asset that's going to also serve them as well. So it's a win-win, right? You're solving problems for your clients, your customers, but you're really also taking that initiative to better yourself as a business owner, and you're creating an asset. So fast forward, I've worked in corporate, and before that, I am a 4th generation entrepreneur. So I've grown up in businesses, and I grew up in the restaurant industry. So if anybody out there knows that industry intimately, you know that it's a low margin, a lot of labor. It's a labor of love, I call it. And I watched the way that my parents managed and operated their business and the challenges that they had. And then I went on to go work for these big entities and learned a lot of skills and a lot of things. And I realized that there's a big gap in the market for people to take these big companies, the way that they structure their finance departments, the way that they implement processes and workflows, and bring it to small businesses. And when I say small businesses, I think the SBA defines it as a business under $500 million. So that's a wide range of what a small business is, but I know that the entrepreneurs we work with they're out there doing such amazing stuff. And we're excited that we have these tools that I'm going to show you today to really help them make decisions, know where to spend, know how much they can spend, and really just protect their margins so that that asset that they're creating is able to continue on and do a lot of great things. So along the way, we've created the Predictable Profit Accelerator, which I'll tell you a little bit about in just a minute. And essentially what we're going to go over today is one component of that Predictable Profit Accelerator, which is pricing. And pricing is such a really big driver in your business. Obviously, cash is king, right? Cash is what makes the business go round. If you get your pricing incorrect, you're not going to have cash to do all the things that you need to do in your business. So super important. And let me show you a little bit about our Predictable Profit Accelerator. So up here, we have 5 different modules that a healthy business has locked in. And this all relates to your business model. So when we talk about pricing, you can see that's in module 2. That's just one component of what goes into having a business that has a solid financial foundation. And so when you have your pricing for profits dialed in, just like it says here, you can confidently invest ahead with profitable pricing and accurate cash flow projections. So how many of the business owners on this call right now wish they had a crystal ball that could tell them what's going to happen next week, next month, next year? Well, we don't have a crystal ball. None of us do. But what we do have is tools and skill sets that will get you as close as possible to knowing what is going to happen in your business. And the best part about that is when you have a cash flow projection, you can plan for different scenarios. So you can say, if this happens, then I'm going to do this. If this happens, then I'm going to do this. And we hear a lot from our clients, I can sleep sound at night because I know that no matter what happens out in the outside world, whatever happens with the economy, whatever happens with, my big clients, my vendors, my team, I've got a plan in place. And I'm confident that I'm not going to be reactive because I've already been proactive and created all this stuff. So one of the first components of that is getting your pricing correct. So I'm super excited to walk you guys through that. And, if you're sitting here and any of these things listed on this slide sound familiar, I just want to tell you that you're in the right place. So does this ring true to anybody today? Sales are strong, but there's never any money in the bank. Does anybody feel like that? I know from time to time, everybody's experienced that. And this is one of the symptoms of incorrect pricing. So that's one thing. Maybe you're struggling to fund your scaling and growth goals because you don't have the financial resources. You need to hire more team, but you're just looking at your bank account going, I don't know how I'm going to afford it. Or you really need to invest in a different lead generation source. So you need to invest in marketing or ad spend. And you're just looking at your numbers going, I just don't know where I'm going to squeeze that money from. And you're not always sure you have enough margin to cover your operating expenses, your customer acquisition costs, and your reinvestment into growth. So let me know if any of these are symptoms that you're experiencing in your business. Type a 1 in the chat if any of this is where you're at now, or you've experienced this, and this is something that you're very excited to have solved so that you can continue to grow your company. Awesome. Lauren says yes. And yeah, I think especially fast-growing companies, these are real problems that they always have. And, so you're definitely not alone there. So incorrect pricing is costing owners profit in their business. So let me just pause there and let that sink in for a minute, because you might have pricing that is giving you enough margins to pay your team, to pay your bills, to pay the rent, pay all the things. But at the end of the day, if you don't have profit left over in the business, you're just wasting your time. You're spinning your wheels, because profit is not like, oh, I'm just going to go and grab all that money and go spend it and buy fun things and vacations. Profit has a purpose in your business, and profit is what you're going to pay your taxes with. Profit is what you're going to reinvest back into growth in the business. Profit is what you are going to use for distributions. And profit is what you service your debt with. So when I say it's costing you profit, it's really causing more pain than you realize, because it's not just a vanity number of like, oh, I want to have a 20% profit margin. Well, what does that really mean? That really means that you've got enough cash to cover all of the activities that don't show up on your on your profit and loss statement. So it's super important to get clear on that and to understand how much pain incorrect pricing is really causing you, and the effect it's having on your business. So let's dive into our agenda for today. In our short time together, I'm going to cover a lot. So feel free to pop some questions in the chat. My aim is to give you guys confidence. I want you to be confident in the pricing that you're charging for your products and services, because that's going to give you the confidence to make other decisions in your business, because you'll have the cash flow to do that. And that's really important. There's nothing worse than second guessing ourselves and going, oh gosh, I think I have enough money to afford XYZ, but I'm just not sure. Or even worse, you make that decision and you invest in whatever it is that you needed, and then all of a sudden you run out of cash and you're scrambling to cover payroll, or you're scrambling to cover whatever it may be. So I'm going to teach you the secret to determining exactly how much it's costing you to deliver your product or service. I'm going to teach you the exact percent of your revenue that you should be spending on delivering that service, no matter what industry that you're in. And I'm going to show you how to make sure that you always have money available for all of your other business expenses. How does that sound? Does that sound like that would be a big sigh of relief if you had these 3 bullet points solved in your business? Type a 1 in the chat if that's something that you're excited to find out. Yes, I love it. Woo. All right. You guys are my people. Let's dive in. All right. So step number 1, to be able to determine exactly how much it's costing you to deliver your products and services, there's a few things that we first have to understand. And there's a few things that we have to have tracked in our profit and loss statement. So let me first explain to you why it's so important to be able to know how much it costs you to deliver your products or services. So if I told you that you only have a certain percent of every dollar in revenue that you generate to spend on delivering your products or services, would that make you nervous? Would that make you think, oh gosh, I don't even know how much it cost me to deliver it? Well, let me tell you, most business owners don't look at it from this point of view, because let's be honest, we all love to over deliver. We all love to just give to our clients because we see the results that it's having, and we see how great it's, they're happy and all of the good stuff that goes along with that. But it's so important to determine exactly how much you're spending on delivering that product or service, because you have to make sure you have enough money left over in your business to run it and grow it profitably. So most business owners, that when they first come to work with us, the first thing we do is we walk them through an exercise to say, out of all the money that you've spent, pick a period in the last month, in the last quarter, how much of that was for expenses that you only paid that money out to deliver on the sale. So another way to look at that is if I didn't make the sale, would I have still spent that money? So let's think about some of the things that go into, now it's called your cost of goods sold. That term is widely used and understood. Technically, that's for a product-based business. If you're a service-based business, it's going to be called cost of revenue. But for simplicity, we're just going to say COGS, cost of goods sold. So if you look at all the money you paid out in your business and you said, which of these did I spend money on to service a sale? Whether that's direct labor, and actually I have a list here I can show you. Whether that's direct labor, contract labor, specific software that's required to service that sale, merchant fees, special permits or licenses, rentals, and so on. So what you need to do at this point is get a list of all of your expenses, pull your general ledger detail, and that will show you each account and all the transactions and dollar amounts that represent the balance in that account. And look through and highlight which ones of those did I spend money on to service the sale, or flip it around. Would I have spent this money if I didn't make the sale? And once you understand that, then we want to make sure that when we're categorizing our profit and loss statement, all of those expenses have their own section, and that's called your cost of goods sold. Those should be split out from your general and administrative operating expenses, because we want to understand how profitable am I on what I'm selling. So this is one of the tools that we use with our clients. It's called the pricing analysis. So I'm excited that you're here today, because the good news is you're going to get a copy of this and you're going to be able to use this in your business. And it makes it so much easier to break down all of those directly related expenses and to check your pricing and to understand the real profit, the real margins that you have, and then what that profit breaks out to be. So let me walk you through a little bit of this sheet. The good news is, don't worry about you having to fill it out. I'm going to give you an opportunity at the end of the call to book a call with me, and I can walk you through this a little bit more in detail, custom to your business. But for right now, I want you to look at it and go, how would this change the way that I do my pricing in my business? Who's setting their pricing without having a tool like this? It happens all the time, because a lot of times we don't know where to start to understand what we should be charging. So let me walk you through a little bit of this, and then if you have questions, pop them in the chat and we'll keep moving. So what this does is it's a way to break out the direct labor and the other cost of goods sold in the products, in the services and products that you're selling. So this is for a service-based business. So we're going to say service number one, the sales price is $2,000. Don't worry about the markup yet, because that's a calculation based on, all this stuff below. So first thing you're going to do is break up all of the labor. Who does labor? Who does what? And how much time are they spending? What do we pay them? So what's the true cost there? Then we're going to look at any other cost of goods sold, software, material. These are just examples to show you. But what I want you to see is that this is the way that you easily input the data, and it's going to give you your total cost of goods sold. So in this example, the total cost of goods sold is $804. So if I'm charging $2,000 for this service, and it's costing me $804 to deliver it, well, then I know I'm doing pretty good, because I have a gross margin of almost 60%. That means that I have enough money left over to allocate to my marketing, to my general administrative, and profit. So when we talk about your individual services being profitable or not profitable, or understanding how much it's costing you to deliver them, most businesses do not just have one offer that they sell, one service, one product. We all have multiple things that we sell. So it's really important to break it down by income stream. So this is an example of a profit and loss statement that has the income broken up by income stream and the correlating cost of goods sold broken out so that you can see which ones are my winners and which ones are my losers. Because 99% of the time, not everything you sell is profitable. And if you just lump everything together in your P&L and call it one revenue line item, sales, you're not going to get this detail to know if you've got one product or service that you've got a 60% margin on and maybe one you've got a 20% margin on, because they're going to blend together and they're going to look at it and go, it's not that bad. But you don't see that really one of those is really killing you and draining. That's what we call money leaks in your business. That's one example of ways that business owners without this type of visibility, they don't know that there's hidden money leaks in their business. They just have the symptoms of, gosh, I'm making money, but there's just not enough left over. There's never enough in the bank. There's never enough to do all the other things that I know I want to invest in my business to grow it and to do all the other stuff that I want to do. So the second step, so that's all step one. The second step is to say, okay, now that I know how much I'm spending on delivering for my services, how much should I be spending to deliver your products or services? So this is where it becomes really important to understand. I'm going to walk you through a exercise here, and we call it the bucket analysis. So in your business, I want you to think of it really, really simply. Imagine that you have 4 buckets in your business. And those buckets are, you're going to give a certain percent to. So let's say you have 100% and you have to choose an allocation for each of these 4 buckets. So let me tell you what these 4 buckets are. We've got our cost of goods sold, and we just went through what those types of expenses are. We've got our G&A, which is general and administrative expenses. So those are going to be your indirect expenses, indirect labor, so admin support. That's going to be your telephone bill, your rent, your insurance, your benefits, all the things that are general and administrative expenses, office supplies, meals and entertainment, travel, continuing education. All of that is going to go into the G&A bucket. Then you have marketing. And marketing, the way that we work with the marketing bucket is it's any cost incurred to generate a lead in your business is a marketing expense. And then finally, we have profit. And so if you just think, okay, I have 4 buckets to allocate every dollar in revenue that comes into my business between those 4 buckets, you're going to look at how should I do that? Well, the first thing you want to know is that there's certain expenses that you have to pay, certain buckets that have to be fixed. So we just went through the exercise to understand how much your cost of goods sold is and what percent that represents. So if we have debt that we have to service, we've got, a loan, or we've got an idle payment, an idle loan that we're repaying. Maybe you have a mortgage, you have vehicle loans, equipment loans. That debt you have to service, and we have to make sure we have enough profit to pay for that. So some of those types of things are going to make your percentages fixed. So if you start with those 2 big buckets as like your bookends, and you determine what your cost of goods is and what your profit needs to be, then the G&A and marketing we can kind of wiggle with and determine how we can make that 100% get allocated to meet the business's needs. So here's a general breakdown that a healthy company is going to have. So our cost of goods sold is going to be 40%. Our general and administrative is going to be 30%, our marketing 10%, and our profit 20%. Now, let me just say, depending on your business model and your industry, these might fluctuate a little bit. So if you look at somebody like Coca-Cola, they have a higher COGS and a higher marketing because their margins are much smaller, but they're selling on a large scale. So that changes the percentage breakdown. But if your business is high 6 to 8 figures, this is an allocation that you can take and implement in your business. So once you understand what percent should go in which bucket, then you can go back and look at what yours breaks out to be and say, where do I need to make some adjustments? So as we move into step number 3, I want you to just think about, we went through the exercise to get all of your cost of goods sold identified. And then I gave you a percent. It should be for every dollar in revenue that your business generates, 40 cents should go to deliver on that, whether your product, service. And if you're at 50% in cost of goods sold, that's okay. You just have to, shave a little off of one of the other buckets, but it can't come from the profit bucket, because that's most important, that we don't jeopardize the integrity of how much is going into the profit. But maybe you have to be, cut some costs in your G&A bucket, or you have to find some other forms of lead gen that don't cost as much. Or you look at it and go, yeah, I think I can shave a couple percent off of my delivery, and then lower your cost of goods sold. So I hope everybody understands that you have the same 100% no matter what you do in your business. And it's up to you to determine what that allocation is that is right for your business. Now, that's what we do all day long with our clients, is help them. We walk them through and we look at their business model and we say, well, what should it be? Where are we at now? And what are our goals? And we always break it down, 2%, 5% of a shift each quarter, that compounds, and that really makes a big difference. So I don't want you to look at this and go, oh my gosh, I'm at 70% in my COGS, the sky is falling. That's just a starting point. That's just where you're at right now. And there's a lot of things that you can do in your business that once you know that, and you know what you're trying to get to, well, now you have some concrete information and you can make decisions to help get you down to that right percent. So the third step is you always want to make sure you have enough money left over for all of your other business expenses. So this is where it becomes really important to have a budget. So you can see on this example here, what we are doing here. There's a lot going on in this spreadsheet. We're looking at whether an expense is a cost of goods sold or a general administrative. You can't see all the way down, so you don't see the marketing and the profit lines, but essentially we're breaking out the different types. So we've got our buckets split out on our P&L and on our budget as well. And we're looking at, is it a fixed expense or a variable? What's the seasonality that this business has? And then we're filling in the budget based on staying in those percentages for our buckets here. So can you see how this is going to help make sure that you don't overspend in your business, and how this is going to help you to plug money leaks, how it's going to give you that visibility and clarity. And what I also really like about having these resources and these tools is if you have a management team, this is stuff that they can be measured on. This is stuff that they can see, and everybody has the clarity of, if I hire that other person, or if I invest in this product service, how is that going to flow through, and how is that going to affect my budget for, my area of the company? So it gives you a lot of clarity. It gives you a lot of peace of mind that you've got a plan. So every dollar in your business should have a purpose and a plan for it. And this is how you accomplish that. So what I would like to just circle back on and recap for you and walk you through, I'm going to give you some specific examples of businesses that we work with and what we've been able to do in their business to really have an effect and put what I'm teaching you into real world examples so that you can see yourself in that and go, oh yeah, if I had that tool, how would I make different decisions? Or how would I have done, whatever it may be around your money in the business. So here's what we covered. We've covered the secret to determining exactly how much it's costing you to deliver your products and service. We showed the way to do the pricing analysis that helps you identify all of those expenses that are really cost of goods sold and not general and administrative. We showed you the exact percent of revenue that you should be spending to deliver your product or service. And no matter what industry you're in, you're going to have an allocation of those 4 buckets. And you, once you determine what yours is, what makes sense for your business model, then you have some nice ways to gauge how the profitability of the company is. And when I say the profitability, it's not just what's the net income. It's all along the way, the profitability of how you're spending your money and how you're increasing the wealth, if you will, of the business, and how to make sure you always have money available for all of your other business expenses. So this is just scratching the surface to kind of show you how to start to approach this in your business. And one of our clients, I think I had, yep, here we go. It's a commercial painting company. And I don't know why there she is. And she's got multi-state. So she's got divisions in various states, multi-entity. She's got entities that serve the other entity and money flows all over the place and things like that. And one of the things that Gretchen said to us is it's so exciting to be getting the knowledge that we desperately needed to be successful. When we did a deep dive in her cost of goods sold, we were able to show her that, she wasn't too far off from the 40%. She was at 47%, which is still super healthy. But when you're a $13 million company, 7% that we could work towards lowering down to the 40% and not changing any of the other bucket allocations, that goes right to the bottom line. So if you don't know how much you need to trim down one of your bucket percentages, then you're just kind of shooting in the dark, right? It's just sometimes our clients go, oh, I don't want to look at the numbers, and they just want to bury their heads. But once we show them, oh, it's actually really simple. You just need to, organize you need the tools, which are these reports and these spreadsheets that I'm sharing with you today. But you also just need to understand, how should it look? And once you understand how it should look, it's much easier to make those adjustments and the spending habits, just rein in a few things, and it will have a really big effect on your business. So I think that I'm at the end of my teaching portion here for you today. And I'd love to find out, what questions do you guys have, relating to your business, or any questions on the material that I've presented to you today. I'm going to just open it up at this point and talk to you about that. And then I will give you an invitation on how you can get these spreadsheets and a 15-minute session with me to go over them once we go through some questions, if there are any.
Yeah, we have a couple of questions here, Andrea. And if anyone else has other questions, please raise your hand or pop them in the Q&A. You mentioned winners and losers in terms of various things that we sell. If you have a mix where some are the winners and some are the losers, do you recommend just immediately ending the losers, or is that an automatic increase the price, or what would you recommend there?
That is a great question. So there's a couple ways to look at it. And one of the things that I know happens in like the marketing discipline is they talk a lot about a value ladder and moving your clients through a value ladder. So it's very common that businesses have what's called a loss leader. So you might have, like, for example, we have an engineering client who does what's called a loss leader. So they do a portion of a small service that they do, and they price it very competitively so that they can get their foot in the door, because they know that if they can get their foot in the door and get that client in to take up their offer on a small level, that they're going to wow them and the client's going to hire them for the whole job. And it moves from a flat rate billing to time and material. So they know that if I can just get in there, then I know that I'm, 80% guaranteed to get this other portion of the job, which means they're moving through their value ladder. And that's going to be incredibly profitable for them. So when we look at two numbers for them. We do separate out that one revenue stream that we know is a loss leader, and we're always monitoring it, because we know that if we fall below 80% on it turning into the work for the really profitable revenue streams, then we've got to make some adjustments. But in that instance, that's an example of having a loss leader, because it gets them that opportunity to generate the really big revenue on the other side. So that's one example. The other thing is that if that's not the case, and that's not how your business model is set up, and you look at it and you go, okay, I'm offering 3 different revenue streams, and 2 of them are profitable and 1 of them is not, or I'm breaking even on it, then you also need to put it through the lens of how much time and energy is going into that profit, that revenue stream that I'm just breaking even on. And you might go, oh, that's my least favorite to even, my team hates it. Everybody gets grumpy and it's, I don't even know why we're selling it. Well, there you go. That's your answer, right? You're not making money off of it. You don't enjoy delivering it. You need to just get rid of it. But it might be something, that's the opposite of, like, I have these other 2 revenue streams and they're very profitable. And I have a third one that, it just really lights me up and I love to do it. As long as you're not losing money on it and it's not, cannibalizing any other of the cash flow in the company, then that's something you can look at and make a determination on. But I think for the most part, you want to keep the winners and do whatever you can do to either make the losers get them up to be profitable, or determine, maybe we need to cut this one.
Fantastic. Erin has a question, Andrea. What bucket does sales costs belong in?
Yeah, so there's a little bit of debate on where that should go. And ultimately it depends on you, the business owner, and how you're viewing the holistic view of the way you're allocating your expenses. I think that they belong, depending on your industry, typically I see them in 2 places. They're either in your cost of goods sold, because it's an expense to generate a sale, or it's in your marketing bucket. So I think very common, it's in your marketing bucket, because you're taking a lead and you're converting it to a sale, and then it moves over cost of goods sold. You're delivering it. You've got your G&A, which is kind of your general support, support there, and then you've got your profit. So if you think of it in that way, I would recommend that it goes in your marketing bucket.
Great. And does that change the percentage at all, Andrea?
That's a good question. So it depends on your business model. And typically we see between 5 and 10% in the marketing bucket. And that does include, ad spend, that does include, all of those other lead acquisition costs. So the sales, now, if you're paying out, let's see, I guess it depends on how you're structuring the comp package for the sales team. So for example, if you're paying commission only, then I would put it as a COG, because you're only paying that out because you made a sale. If it's somebody that's just on like a retainer and you're paying them the same amount no matter what, then it goes into your marketing. And you have to determine, can I trim my G&A bucket or my COGS to be able to bump up my marketing bucket to maybe 12 or 15% to account for that you're going to pay it no matter what cost. Then that would be my recommendation.
And we have another question along the similar lines. Does the percentage I put into each bucket look different if I sell a product that I have to ship?
Yeah, so shipping is going to go into your G&A, and it really boils down to, you have the same 100%, and we have to look at, how can we do it as profitable as possible and as close to the 40%? If you're shipping a products are going to be a little bit higher, especially if, like, some of our clients, for example, charge for shipping. But if you don't charge for so if you charge for shipping, then it's a pass through, right? Because you're collecting the money for that, and then you're paying out the COGS for that. So it won't affect your percentage there in the delivery or in the servicing that sale. But if it's something that you're absorbing and it's like a promo that you say free shipping and things like that, then you're going to have to account for that somewhere, right? So either you have to lower one of your other percentages if you're trying to align to that 40%, or you have to say, no, it's going to be 50% and I can't do anything less than that. And that's okay too. Like, there's no hard, fast rule. It's just a general recommendation. But then either your marketing or your G&A has to go down by 10% to account for that higher cost of goods sold. And that could just be, that's how my business model is, and I can't wiggle that there.
Great. And Cheryl has a question. Does office staff that takes orders go into COGS, even though they are paid if no sales are booked?
No. So it's a clear delineation. Would I have paid this expense if I did not make a sale? If the answer is yes, it's a G&A. If the answer is I only paid that because I made a sale, it's a cost of goods sold.
Great. And Angelina's asking, where do you suggest wages and benefits go in cost of goods or G&A? We are a service-based business and our revenue is based only on hours worked by our employees. So
that's where we want to split out our direct labor from our indirect labor. And then on one of my slides, I did have on there a blended rate. So when we talk about a blended rate, that means that we're looking at, okay, I pay an hourly rate of $25 an hour, but then I also have benefits that I'm paying for this employee. It could be a 401k match. It could be medical, dental, all of those types of things. Those are going to go into your blended rate. You're also going to incorporate into their employer matching payroll taxes, your payroll processing fees, things that, when you're looking at, do I really, as a business owner, incur $25 an hour, or is it really 32 when I put all of the other things that employee gets? That's a blended rate. So if it's direct labor, which means they're servicing a sale, that's going to be part of your cost of goods sold. And if it's that support team and it's indirect labor, that's going to be part of your general and administrative office or expenses. Let's see, did I answer that one, all of it? Yeah. So by hours work is based on hours work. So if you don't have any support staff, I guess it would all be direct labor. Yeah.
I'm just going to take a minute here, Andrea, to share. You mentioned earlier with the spreadsheet that everyone's going to get a copy of that. So we are going to send that to you after the masterclass today. Check for that in your inbox. You'll be able to make a copy of it and input some numbers for yourself or play around with that a little bit. And if some of these questions keep popping up for you and you want to have a conversation with Andrea and have that conversation about your unique business and what's happening in your company and how that would apply to the spreadsheet and the pricing overall, then we will absolutely include a link to schedule some time with Andrea and have that personal conversation as well.
Yeah, absolutely. There's a lot of variables. This is like some just general get you started down this road to understanding what it's costing you. But I think what really this is an investment in your business model. And so I think it's really important for business owners to take the time to get all of these numbers dialed in specific to your business model, because it's going to give you that, like I said before, confidence. You're going to confidently know, hey, I'm charging the right amount for my products and my services. And I know that all the other numbers in my business work because my bucket allocations are in alignment with what my strategic goals are for the company. So for example, if you're trying to grow the business and you're, a fast growth corporation or entity, then you're going to need a lot more cash. So you're going to have a different bucket allocation than somebody who's like, oh, I've been in business for 40 years and I'm just, humming along. I'm not trying to grow super fast. Well, their bucket allocation is going to look different because they don't need as much to reinvest back into that growth and, all of the different components that go into that. So that's where it's really important to understand I'm going to just flip back to this. Hang in there, this one here. When we look at the very first module in our Profit Accelerator is to understand what's your roadmap. What are you trying to achieve with your business? What's your 1, 3, 5-year financial goals? And then we work backwards from there. So we want to make sure that whatever it is that you're trying to do with this asset, because your business is an asset that's designed to generate personal wealth for you, the business owner. Whether that's by taking, distributions or dividends from the profits all along the way, or whether that's setting up your business to be acquired, or you want to exit, retire, whatever that may be, you want to make sure that your profit roadmap and your bucket allocation matches those goals. Otherwise, you're going to be, having a mismatch of what you're trying to accomplish in the business, how you're allocating your resources, your spending, your hiring, your marketing, and just all of those components. So that's why it's really important to get these pieces dialed in so that you can kind of just focus on doing your genius in your business. And that you have, this amazing stable base in your business that you don't have to guess or feel like, I think it's the right thing to do.
Yes, absolutely. Andrea, maybe we'll wrap up with one more question.
Sure.
If you have hundreds of SKUs, do you do income and COGS for each one?
Yeah, absolutely.
Okay.
So on your P&L, you might not have hundreds of line items. You might roll them up into categories or divisions or locations or things like that. But absolutely, you want to go into each one of those, especially if you have that high of a volume of SKUs, because that's where you can have some really big cash money leaks in your business because you don't have that visibility to know that each one of those, check the box. Yep, this one's good. This one's good. Oh, this one I need to make some adjustments on how I deliver it or how I, create that product or whatever it may be. So that it's probably even more important for some in a business like that to go through this exercise.
Fantastic. As I mentioned, keep an eye on your inbox today. You have an opportunity to book a call with Andrea. Also, you'll receive a copy of that spreadsheet where you can start playing with your pricing and seeing where that profit number lands. And of course, we're happy to help answer any additional questions. You'll have us in your inbox, so feel free to respond or book that call with Andrea.
Awesome. Well, thank you. Thank you, Dory. Thank you, everybody, for taking some time and investing in yourself and investing in your future and your asset that you're working to build here. I just think it's very honorable that you are doing that for yourself and for your company. So it's been great sharing space with you. And I hope you all found this useful, and we're getting some good notes in the chat. So I think we were successful.
Fantastic. I hope everyone has a great day, and we'll talk to you again soon. Thanks for joining.